After IT companies, financial institutions will be next in line to announce their September quarter results. Starting with HDFC Bank on October 15, Axis, ICICI and IndusInd Bank will report their results next week. SBI and other public sector banks will follow suit. Going by analysts' estimate, banking and financial services sector could be the best performing sector for a second straight quarter as credit growth remains robust and bond yields cooled off.
I think this quarter is going to be one of the best quarters for banking sector in many years. Loan growth for the sector has picked up to 16% year on year at the end of September versus 13% year on year at the end of June. Margins should expand for the sector because policy rates have gone up by roughly 190 basis points. But bank deposit rates have only gone up by roughly 125 basis points. So we should see some margin expansion this quarter. Third, if you look at bond yields, they are broadly flat QOQ. So banks should not have any mark-to-market losses, which many banks had in the last quarter. And finally, if you look at all the data points, they are suggesting that asset quality is still benign for the sector. So the new NPA creation for the banking sector should be very low, leading to very low provisioning cost during the quarter.
Independent market analyst Ambarish Baliga believes aggregate net profit for the sector may surge around 40% over previous year.
I'm expecting banks to report strong earnings growth on a sequential basis for Q2, looking at the robust credit growth and margin expansion. Y-on-Y operating profit growth should be closer to about 21%. Net profit growth should be about 40%. NII growth is expected to be closer to about 17% Y-on-Y. The larger private sector banks would perform better compared to the smaller ones as well as the PSU banks.
Meanwhile, Bloomberg's consensus estimate pegs net profit growth of the 16 listed banks at 23.4% year-on-year and 20% sequentially. Net interest income, meanwhile, is expected to have risen 10% year-on-year and roughly 10.8% sequentially. That said, the pressure to mobilize deposits amid shrinking liquidity could put pressure on profitability and margins going ahead.
I think one thing where investors should keep an eye on is bank strategy around deposit growth. So if you look at right now, deposit growth for the sector is roughly 9% YY versus loan growth of 16% YY. And banks are funding this gap using the excess liquidity they had created during COVID. But my guess is that they have run out of this liquidity now. So ultimately, they will have to bridge this gap between loan growth and deposit growth. So the strategy will be very important in the sense that it could lead to some margin compression for the banks in the second half or slowdown in the loan growth or both.
As regards today, Q2 results of HCL Technologies and Wipro will be on investors' radar. Retail inflation data for September, Traxon Technologies IPO, oil prices and other global cues will sway the markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.